Hello, the National Business Information Clearinghouse and Entrepreneurial Development Center welcomes you to our series on establishing credit. First, let's talk about how your credit is determined. To do that, we need to define what credit is. As business owners and consumers, we constantly hear about the need for good credit. But what is credit? Credit is your ability to receive money from an unbiased third party based on your financial history. It usually boils down to a numerical score that sums up your financial history. So you may be wondering how your credit is actually calculated. Your financial history is determined by reviewing your credit report and FICO score, a numerical score that is determined by 5 major factors: payment history, amounts owed, new credit, length of credit history, and types of credit used. The credit report does not tell potential lenders your ethnicity, sex, marital status, salary, or interest rates being charged on credit cards or other accounts. Now you're probably wondering, who gets to determine your credit rating? The top 3 credit reporting agencies are Equifax, Experian, and TransUnion. In the past, Fair Isaac Corporation developed these scoring models used by all 3 agencies, which is why credit scores are also called FICO scores. Keep in mind that over 75% of mortgage lenders and over 90% of credit card lenders use FICO scores in deciding whether to extend credit to you. These scores range from 300 to 850, so the better your credit, the higher your FICO score. In general, a score above 680 is considered to be prime. That means loans are provided at standard market rate. If your score falls between 575 and 680, you will typically receive subprime loans, which means you will be charged higher interest rates. And if your score is below 540, you will most likely be denied credit. Your credit also impacts the interest rate you are charged. For instance, when you or your teenage kids get a speeding ticket or get into a traffic accident, your car insurance usually increases. The same holds true with your credit score. For example, these are the payments for a 36-month auto loan of $5,000. Note that people with the lowest credit score pay over 2 times more in interest than people with the highest credit score, all because of their low credit rating. As you can see, there's a lot of value to improving your credit score. Start by asking yourself the following. Do you pay your bills on time? If so, that reflects positively on your credit score. Do you keep your debts reasonable? If you already have a large portion of your income paying off debt, the lender will question whether you will be able to pay off their loan. How long have your credit cards been open? Have they been active or inactive? Have you avoided unnecessary inquiries? If you have a lot of inquiries in a short period of time, the lender might think you are in financial difficulty or overextending yourself. Have you eliminated excess credit? A lot of available credit gives you the capability to overextend yourself in the future, even if you haven't done so in the past. Have you ever filed for bankruptcy? Filing for bankruptcy results in a 160 to 220 point deduction and remains on a credit score for 7 to 10 years. Now it's your turn. Imagine you work in a credit reporting bureau and have access to the employment history, credit information, and public records on the following individuals. Review the following profiles and designate a credit rating between 300 and 850. Juan is 30 years old. He has 4 credit cards that he's used for the past 5 years. He typically pays the minimum amount plus $250. A balance ranging from $200 to $500 on each card is forwarded to the next statement. Juan frequently gets offers for new credit cards, but shreds them immediately. He has been working at the same job as a shop foreman for the past 8 years. He has a car loan. Next month, he will be paying on month 24 out of 60 months. Juan rents a 2-bedroom apartment, which he shares with his wife and 2 children. He pays his bills and loans on time. However, when his mother was in the hospital for a few months last year, he did forget to send his credit card payment several times. Now that you've heard Juan's financial history, on a scale ranging from 300 to 850, what score would you give him? Because of his work history and ability to make regular payments, Juan's credit score is 700. Consider this next profile. Sophia is 27 years old. She shares a 2-bedroom condo that she rents with another friend. After graduating from college, she leased a brand new SUV and landed a job in an advertising agency as a production assistant. Each weekend, she would hang out with her coworkers at the nicer restaurants and bars. She also dressed stylishly and shopped at trendy boutiques. When she was unable to pay the balance on her major credit cards, she applied for a new credit card that offered 0% on balance transfers and rolled over the balance. Soon, Sophia found herself with 6 major credit cards and over $125,000 in credit card debt. Her salary was nowhere near enough to cover the monthly bills or pay down the credit cards. She was not able to apply for or get any new credit cards and was still not able to pay off her monthly bills. As a last resort, Sophia went to a debt consolidation company that advised her to declare bankruptcy to wipe the financial slate clean, which she did. That was 2 years ago, and now she is on a very strict financial budget. Given Sophia's financial history, what score would you give her using a scale from 300 to 850? Sophia's credit score is 400 because she had poor money management skills, misused her credit cards, and declared bankruptcy. It's time to test yourself. Answer true or false. Your credit report details your ethnicity and the salary you make. False. Credit scores are called FICO scores after the Fair Isaac Corporation. True. People with lower credit scores pay less in interest than people with higher credit scores. False. Paying bills on time reflects positively on your credit score. True. Your credit score impacts the interest rate you are charged. True. Congratulations! You've now learned how credit is determined and why good credit is important. For more information on this topic, view the next EDC training titled Ways to Establish Credit. Take the Creditworthiness Self-Assessment found on the Business Information Clearinghouse under Getting a Loan, or visit one of our customized business information clearinghouses. These websites give you access to a variety of free resources for starting and growing your business. Thank you for visiting the National Business Information Clearinghouse and the Entrepreneurial Development Center. The World of Business, translated. This program was made possible by the generous support of founding sponsor, Western Union.